Hello traders, this is Rich from tradesight. Just want to take a few minutes here and recap a trade that we had today in Apple following the earnings. We had a very similar setup to what we saw from the other week in Netflix, and we definitely took a page out of the playbook from the Netflix and used a similar technique and had very good results. Our first target was 12.5 points away from the opening price of the trade, and we definitely saw that and more. So let's just real quickly talk about the setup. Right here we have basically the swing low in Apple down here at about 390, and then we had this extended drive to the upside here that went all the way up to about $530. So that's a 140 point run, or 35% if you will, which is a very big move for a mega cap like Apple. So there's a lot of market cap put into this ahead of this earnings report, and certainly there were a lot of longs expecting good results that were already invested in the stock, and really kind of set us up for to think that the longs are already in position, and the shorts may wind up having the upper hand after this result, looking for some longs to come out of it, and maybe some shorts to just try and start feeling their way again. And we did that on an intraday basis on the short side. Alright, so here's a look at the daily chart in Netflix. Similar situation, extended run up into the earnings report, gapped up on the earnings report, closed the gap, and then did much more to the downside. This is the Carl Icahn bar, if you don't mind, where he was getting out and taking profits. So we had a similar setup in Apple, and let's talk about the entry and the trade management. All right, so here's Apple in 5-minute bars. This shows the first 5-minute bar of today's trading, and that's really important because that first 5 minutes is when they're kind of feeling their way. You can see we opened, just above 536, like 536 and a half, and you can see that this spurt we had to the upside here, and that's just market makers and people just doing what they need to do in the first few minutes. So you just kind of want to stand aside and let that happen, and let that kind of work its way through the market. So you want to let the opening range start to define itself, and usually we would take the first 5-minute candle and use that to qualify what the first 5-minute range is, the opening range, if you will. So here we've got a low here at 534.56, which was the low of the first 5-minute bar. So we put into the messenger for subscribers and also to our Twitter followers, to the general public, that a break under the first 5-minute low would be a legitimate scalp entry. And certainly that happened. Here's the next candle, and you can see that the next candle was a very bearish candle to the downside that almost closed the gap. So the gap in the first 10 minutes of trading now has almost been filled. But the question is, what do you expect to happen after the gap fills? That's obviously on everybody's mind. Is it gonna hold there? How much buying is there going to be at the gap fill, and what to expect after that? Well, after the extended run-up that we just talked about, that 35% run-up on the daily chart ahead of this earnings report, there's a pretty good chance that the gap buyers would be filled, and then there would be follow-on supply as longer-term profit takers came into the market, noticing this initial weakness and taking advantage of that to say, listen, this might be a high watermark here, so I'm going to sell some. So when those players from the larger time frame come off the sidelines, get involved in the stock, that's when you can have some real sustainable and some real dynamic moves in the stock. All right, so here's a look at the 5-minute chart. Here's our short entry underneath the first 5-minute bar, and then we're short the stock. Once the trade kicks in, what you really want to do is then set your levels and start to project what the reciprocal range is going to be. The reciprocal range is the day's open to the previous day's close minus that same range. The easiest way to do that is to take a Fibonacci tool, set this as the 100% line at the open, pull that tool down until you get the 50% line laying on the previous day's close. Once you do that, you're going to have the tool down here, you release it, and then this level, this zero line, is going to be your trade to target for the reciprocal move. So the reciprocal move, again, just to reiterate, is the closing of the gap plus that same amount of movement, the measured move, to the downside. So we're looking a little bit further down the chart here. So I want to move this to the 15-minute chart now, just to give you a little more candles to see, so you can see the run up here. Here's the run up into the gap. Here's the gap up on the earnings. Levels are still on the chart. They're still the same, open, close, and here's your projection. You can see that the first 15-minute candle closed right at the reciprocal range target at 522, 523. So that was the initial projected target. We had a very strong bounce after that, back up into the area of the breakdown, which was the previous day's 5-minute closing range. Failed there and ultimately rolled, found some more support here at the reciprocal target, and then actually rolled down and expanded the range to the downside. So just to the reciprocal target, which was our intraday target, that was a $12.50 profit. And then of course the remainder of the trade, which is carried over because it closed so much in the money, is still profitable. And our short entry is all the way up here at about 534.5. So we've got a very, very strong defendable entry point here for this short going forward. And this is all based off of the reciprocal range technique. So just want to recap that and share that with you. So guys, when you see these setting up here at range high after an extended move, don't just assume that the gap fill is going to be the ultimate support, because probability suggests that after an extended move, it's not going to hold. And you need to really look for that reciprocal move and make sure that you're piecing into the trade. Now, just going back to the original 5-minute chart, we want to talk about money management here real quickly. Here's your entry point below 534.5. Your stop is over the high of the day at the very most, at the maximum. So essentially, you're risking a fair amount of points here to the upside because of the initial range of the 5-minute bar. But when you calculate in that you're looking for 12.5 points as your initial intraday target, the risk reward is absolutely positively there. It's way more than your typical 2-to-1 ratio that you need to have a reasonable trade. And in fact, if you study the reciprocal ranges a little bit more after the gap is filled, when you break that initial low on the gap fill, that's a trade that can actually be added to. And you can see that if you got short here at 534.5, here's the gap fill, it bounced, and then when you break the low of the gap fill, if you add there, you can carry that all the way down at the minimum to the reciprocal range target at full size, which is something that it makes this particular technique and this particular pattern very, very special, and can really be easily the biggest trade of the month for you on any given setup like this. So, as always, thanks for listening. This has been Rich for tradesight.